Dr. Rangarajan joining in to talk about this. Dr. Rangarajan, I just have two figures with me, but 4.9% is what the CSO has come out with. Do you think that's achievable?
I think it is very encouraging news. This essentially means that the growth rate in the second half of the year has been around 5.1%. Therefore, the second half of the year is doing better than the first half, and this was the expectation. It appears that agriculture has done much better, even though the manufacturing is not doing all that well. But there are some sectors in the service area which are also doing better. But the most encouraging thing is that it is on the upward trend. The second quarter was better than the first quarter, and the expectation is the third and the fourth quarters will even be better. Therefore, it will be in excess of 5% in the second half. Therefore, it can be taken that the decline or the slowdown has bottomed out.
Is there an upside potential to this 4.9% figure, according to you, Dr. Rangarajan?
I believe so. I think as far as I can glean, that the manufacturing is not doing well. But as you know, that for the previous year, 2010-11, the previous year, 11-12, the numbers were revised upwards when the annual survey of industry numbers were made available. Therefore, there is some question whether the index of industrial production is an appropriate leading indicator. Therefore, I would not be surprised that if when the final figures come, that may take a long time to come, the growth rate may be revised upwards. It could be a shade higher than 5%.
Okay, we have something which is coming out from the services. Actually, services is much better than what the street was working with, Dr. Rangarajan, because that's where the positive surprise is coming in. It's coming at a 6.9% figure from the CSO versus 7% in FY13. And to just give you some perspective, the street was working just about with a figure of 6%. Would you confer with this 6.9% figure?
I think so. I think the sector on financing, insurance, and real estate is doing much better. Even though we do not have the exact numbers, what has been depressing the rate of growth in the service sector in the previous years, for which data were available about a week ago, were in respect to the trade, hotels, transport, and communication. For some strange reason, the rate of growth in that particular sector has been brought down in the previous years. Therefore, I think that the service sector is doing reasonably well. Perhaps electricity is also doing well. Agriculture is doing well. Manufacturing, when final numbers come, may look better than what they are now. Therefore, taking all these factors into account, as I mentioned earlier, the final estimate of the growth rate can be a shade higher than 5%. Certainly 5%, I think. Okay.
In fact, Dr. Rangarajan, you did mention trade, hotels and transport. That has been revised much lower in terms of an estimate to 3.5% versus 5.1% on a year-on-year basis. Your thoughts on that?
Well, as I mentioned, that particular segment has undergone a downward revision even in the previous years. We need to look very carefully into it as to why there is this downward revision in that particular sector. But the encouraging factor is that the other segments of the service sector are doing better, and that is why you are getting an overall growth rate in the service sector which is reasonable.
Okay. Dr. Rangarajan, just a couple of more questions. We have some data coming in from the industry space where manufacturing is expected to decline 0.2%. We have construction which could rise 2% or rather 1.7%, and mining a decline of 1.9%. Do you think that there could be an upside potential to any one of these?
Well, certainly for manufacturing. I believe that when the ASI data become available, this could be revised upwards. I mean, it could enter the positive territory. That is one thing. I do not know. Mining and quarrying, we do have the latest data because these are areas in which data do come at periodic intervals. Therefore, but the trade, hotels, transport and communications would need a look. But as I said, that this is not unique to the year 2013-14. This has happened in the previous 2 years also. There have been downward revisions, and one has to understand why this has happened.
I just want to probe that point forward with regards to manufacturing, Dr. Rangarajan, because we are going into a pre-election phase, and we've been talking to a lot of these capital good companies that have reported numbers for this quarter as well, where they've mentioned that execution is extremely dismal at this point in time. In such a scenario, would you assume that there could be a very incremental or a significant incremental uptake coming into the likes of manufacturing, especially pre-election, which would then impact the second half of GDP?
Well, the manufacturing, as far as I see, is in the growth rate is in the negative territory, minus 0.2, I think, and that's a low number. But that is largely based upon the index of industrial production, and the index of industrial production captures what happens in the organized sector, that is the formal sector, much more than what is happening in the informal sector. Now, therefore, if the behavior of the informal sector is somewhat different, then we could get the kind of revision that we had for the previous year, 2011-12, which was almost from 2.4 to 7%. That was the revision. There is a huge revision that was made in the growth rate. Therefore, one should not rule out the possibility of the revision of the growth rate in manufacturing to a higher level.
So if in case there wasn't a revision, Dr. Rangarajan, would GDP then have been lower for this fiscal?
I'm sorry, what is the question?
If in case there wasn't that revision of 4.5% that came through, do you think that this would have been lower than the 4.9% that the CSO has reported, this fiscal?
No, GDP? I don't think so, because the levels might have gone up, and the levels, whatever may be the reasons that have been responsible for trade and industry numbers going down, would apply to the current year also. I don't think so. I think if you look at it, because if you look at it in terms of the level, you will see that going back, 1 year it was raised, another year it was brought down, and therefore, in terms of the level, it may not make much difference.
Okay, we're still waiting by for things such as the gross fixed capital formation, but I'm just going to ask you one last question, Dr. Rangarajan. Agriculture has come in at 4.6%. What are your thoughts on it? And is there a possible upside potential on agriculture? Because most of the economists that I had polled or spoken to had spoken about anything which would be around 5% for agriculture this time round.
Well, this was our own indication earlier that it could be close to 5%. But the CSO says they have made the estimate based upon the advanced numbers that they have received from the Ministry of Agriculture. So I think we will leave it there. But there is a possibility in many of these areas, and that is why I am saying that when the final figures come, we could be a shade higher than 5%. Growth rate.
All right, Dr. Rangarajan, thank you very much for joining in. So that's the word coming in from Dr. Rangarajan, that he does expect maybe there could be a little bit of an upside potential to 4.9%, which the CSO has reported for the FY14 GDP, but it could just about be a shade higher, and we need to watch for any sort of revisions that come through.